hear bets from Andrew Swan, the Managing Director at Head-Asian Equities at BlackRock.
We do like cheap stocks in the region in general, so companies which have more exposure to sort of cyclical growth. And in India we can play that through some of those sectors. And then I would say some of our longer term investments still sit in those sort of secular growth areas where there is reasonable valuations. And I would say there's pockets of the financial services sector which we can still justify there. Some of that is actually quite expensive and well owned, but there are areas within that which we've been able to invest in which we think are of certainly reasonable valuations with good growth prospects.
But are you the sort of investor who goes into areas which are not very fashionable, like say the government-owned banks in India? They're cheap, but they have lots of problems. You spoke about financials, but the private sector names are quite expensive now. So do you go down the value curve if you take a 3-4 year kind of view?
We do. We see ourselves as flexible investors, and we look for opportunity wherever it may lie in the markets. So sometimes we are value investors, and sometimes we are sort of high quality and growth, and generally our portfolios will have a bit of both, and that's that flexible nature. I think some investors in India, but also the rest of Asia, just have a particular style which will gravitate you either into the private sector, say banks, or the public sector. We are happy to look at both.
I was looking at your portfolio. You own quite a few names in the energy sector in India as well, oil marketing companies, some of the petroleum companies. What attracts you to them?
Well, we do see underlying demand growth in these markets, and there are some of these companies that have expansionary opportunities, particularly through brownfield expansion, which is quite attractive. And then we see the industry globally as being in very, very strong or tight demand-supply environment for the foreseeable future. So margins have recovered for some of these companies, but we see it as sustainable, and the valuations are still very reasonable for these companies.
What's your general view on the commodity cycle right now? Because that would distinguish on whether you like markets like India, which are consumers, or producers like Brazil and Russia. What do you think is more favorable now?
We have seen a pretty strong recovery in commodity prices globally over the last 12 months. Over the near term, when you see such a strong recovery, there's obviously a risk that things do retrace some of their gains. But I would still say over the medium term, we see a favourable outlook for commodity prices, partly because of demand recovery, because of global GDP recovery. But also in many markets there is restricted supply growth and capacity growth. The industry has been through a fairly big downturn, CapEx has been cut, and companies are generally reluctant to start investing again until they start to see more sustainable price recoveries. So we're seeing fairly tight markets for the foreseeable future for many commodities.